Hello and welcome to this Croner eCPD module on the taxation of non-resident companies prepared by Paul Davis. Historically, the scope of the charge to tax for non-resident companies has involved a mixture of both income tax and corporation tax charges. Not only that, but there are a number of different charges that non-residents must contend with, and some of these have been subject to considerable change by Finance Act 2019. These changes include the extension of the non-resident CGT charge to commercial property and the introduction of a completely new charge on indirect disposals of UK property. The aim of this module is to give an overview of the scope of the charge to tax on non-resident companies, whether or not affected by the Finance Act changes. During the course of the module, we will look in turn at each of the following four areas: the charge to tax on income arising from a UK permanent establishment, the charge to tax on various different types of property-related income, the various charges to tax on chargeable gains, and finally a brief reminder of the rules for the apportionment of chargeable gains to participators in a non-resident company. The first key learning area is the charge to tax on income from a UK permanent establishment, or PE, of a non-resident company. This area is least affected by Finance Act 2019. The profits of a non-resident company, wherever they arise, that are attributable to a UK PE through which a UK trade is carried on, will be chargeable to corporation tax to the extent that they represent either trading income arising directly or indirectly through or from the PE, or income from property or rights used by or held by or for the PE. This remains the case both after 6 April 2019 and also after 6 April 2020. For these purposes, the profits of a trade of dealing in or developing UK land have, since 5 July 2016, been deemed not attributable to any PE of a company. This means that they are taxed in priority under the separate rules which apply to such trades. We will come to these rules in due course. From 6 April 2020, this priority rule will be extended to the profits of a UK property business, profits consisting of other UK property income, and profits from loan relationships or derivative contracts that a company is party to for the purposes of its UK property business, or for the purposes of enabling it to generate other UK property income. So none of these income types can be attributed to a UK PE after 6 April 2020, and they must be taxed where appropriate under the rules covered in the next slide. Please click on the buttons to find out more. The third key learning area relates to chargeable gains of non-resident companies. This and the next slide look at chargeable gains related to a UK permanent establishment of a non-resident company. Before 6th April 2019, they were chargeable to corporation tax, unless exempt under a double tax treaty, on the disposal of a UK situated asset that was used in, or for the purposes of, a UK trade carried on through a UK PE, used or held for the purposes of a UK PE through which a UK trade is carried on, or acquired for use by or for the purposes of a UK PE through which a UK trade is carried on. From 6th April 2019, the corporation tax charge remains unchanged, but Finance Act 2019 introduced the concept of a relevant connection to the UK PE of a non-resident company. This covers much the same ground as the circumstances mentioned on the last slide. It does, however, extend the charge to circumstances where the asset was formally used and not just actually used in those circumstances at the time of the disposal. Notwithstanding this change, the gains must still accrue at a time when the non-resident company has the UK PE, and, in order to have a PE for this purpose, the non-resident company must be carrying on a trade through that PE. The profits must also be attributable to the UK PE in accordance with CTA 2009 sections 20 to 32. Continue our look at non-resident company chargeable gains. We now look at non-resident and ATED related chargeable gains. From 6th April 2013 to 5th April 2019, ATED related gains were chargeable to capital gains tax at a rate of 28%. This applied to relevant high-value disposals of residential property subject to the ATED annual charge. In addition, from 6th April 2015 to 5th April 2019, closely held non-UK resident companies were also chargeable to non-resident chargeable gains, or NRCGT, i.e. capital gains tax on disposals of UK residential property at a special rate of 20%. Note that both charges are, in certain circumstances, capable of applying to the same disposal, and in such cases the higher ATED-related charge generally prevailed. The key development here is that both charges are repealed with effect from 6th April 2019, to be replaced with a wider NRCGT charge on gains on disposals of interests in UK land. This charge is a corporation tax charge, not CGT, and the assets within its scope are extended to include commercial property as well as residential property. From 6th April 2019, Finance Act 2019 imposes a completely new charge on non-resident companies. This applies to chargeable gains on assets, wherever situated, that derive at least 75% of their value from UK land. These gains are chargeable to corporation tax, where the company has a substantial indirect interest in that land. Note that an anti-forestalling rule applies with effect from 22nd November 2017. This applies where a person has entered into arrangements for tax avoidance purposes in relation to the new rules. Any such tax advantage will be counteracted by the making of just and reasonable adjustments. Please click on the buttons to find out more. We're now coming to the end of this module, and you'll soon be able to test your understanding in our short quiz. The key things to remember from the module are as follows. Firstly, there are no substantial changes to the rules taxing income attributable to a UK PE, however minor tweaks have been made to the related priority rules. This means that property-related income will be taxed in priority under their own separate rules rather than the PE rules. Secondly, property-related income, formerly chargeable to income tax, will, from 6 April 2020, be chargeable to corporation tax. Thirdly, in relation to chargeable gains, the old ATED and NRCGT rules are repealed from 6 April 2019 and replaced with a wider NRCGT charge. Finance Act 2019 also introduces new rules which tax non-residents on indirect disposals of UK land. Finally, in relation to the rules attributing chargeable gains of non-resident companies to UK resident participators, the rules are broadly unchanged but have been rewritten to a new part of TCGA 1992. I trust you found this module informative. Please exit this activity and click Launch Quiz to complete the quiz. Once you've completed the quiz, you'll be able to print out your personal certificate. The module homepage also contains links to the notes that accompany this module and to further resources available to you from Croner. Goodbye, and thank you for using Croner eCPD.
For further information and to view the full range of Croner eCPD modules, visit our website at croner.co.uk.